The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Hi folks, Basil Chapman sitting in for Larry Pesavento today, and of course Larry's show is Trade What You See, and that's exactly what we're going to be looking at here. And of course everyone sees through the eyes of the technical prowess and the technical veracity, the technical structure that they're used to, that they complies with their training and their thinking. So that's what I'm going to do. And basically what I use is a very simple technique whereby I try to identify the most obvious lowest low bar. Here I'm looking at the chart of UNG. I'm going back to the starting point. And in this particular technique called the Chapman wave methodology, and just real briefly, I'll just show you here. This is we have it here at TFN. It's called Introducing the Chapman Wave Methodology by Basil Chapman, Chart Analysis in the Stock Market. And you can type in patterns that I give titles to. If you're looking at something that let's call it double top, you can just type that in and it'll find it for you. Up legs, double tops, exact double tops, how things work. In this case, how the up legs work in the Chapman wave methodology. So from a bar that I identify as the lowest low, you merely count each successive leg up as a capital letter A, B, C, D, E, F to G. So, and D is what you really want to go for. That is the prerequisite. That's what you want in the Chapman wave. Now look at this. If this particular example on slide 88 out of 476 slides and 28 chapters, it goes like this. From that low bar, that is a leg A, and it stays a leg A until it makes a peak. In other words, it's a lower high bar. The whole bar is lower. Then you merely take that left side peak A out by 1 penny, even if it's the New York Stock Exchange trading at 8,000 something. 1 penny makes an incredible difference in my technique. And that takes you, so each little double top, if it's pierced, it takes you right to the next leg, which will be leg B going up until that becomes a peak B. And until that peak B is taken out, or if it breaks below the starting point, that negates the whole thing. But if it just pulls back some and then it goes to another penny higher, that becomes leg C, etc. So this is the CD. It's very thorough. It discusses the techniques and terminology. It has a glossary of about 10 pages or something. And it talks about how you rename the structure of the letters if certain things that happen, sell tracks, buy tracks, just a whole bunch of information that pertains to the arch, the V shape, or the cup, and the inverted V. Those are the patterns you see all the time, right throughout the structure of any chart formations, or you get the straight line move up or down. So those 5, it's really 3 because one's a cup and one's a V shape, but it's the same pattern going from the left side to a decline to the right side. How you take it out, how you don't take it out. It's all it is, very simply. And yes, Mitch, Larry's not here. I'm sitting in for Larry. So in this particular instance of UNG, and I had a call just before the end of my show. I'm on Monday, Tuesday, Wednesday, Thursday, Friday, 12 o'clock, 11 o'clock till 12 o'clock. Larry's on Monday, Tuesday, 11 o'clock. Sorry, Monday and Wednesday. I said Tuesday before, I meant Wednesday. Monday and Wednesday, 12 o'clock till 1 Eastern Time, and on Thursday for the commodities hour. So it's my pleasure to be here. I'm just going to, one step I'm going to take right this very second. Please go to the front page. It's a very short period you have right now. You can make 25% on your money. That's what you want to do in the market. You can do it in real life. You get a 25% bonus match with our Tiger Dollar Holiday Special. Money goes to the Salvation Army. We'll donate up to 10% of your purchase to the Salvation Army, but that's not it. It's in your name, so you get the tax write-off. It's a fabulous thing. So please go to the front page, check it out. It's very clearly explained what you do, how you can set it up, and what you pay for, and you get Tiger dollars that you can use. You get a bonus, and you give to the Salvation Army. Okay, now, UNG is the United States Natural Gas Fund. It made a low on the 19th, the 19th of April of this year in the daily chart. And all you do in the Chapman wave methodology, the simplest way to use it is to just conform to the structure of your moving averages that are going to help you here. So peak A is the very first 15.11 on the 23rd. It goes up, it pulls back. The next day, the high, instead of 15.11, 12 to continue this, what I call the floating ladder, it pulls back to $15.03 was the high. So that's peak A. The moment it takes out 15.11 and goes to 15.12, starts leg B. Leg B, now you look at all the different things. This is what we discussed in our webinar that I did for 2 full days, Thursday and Friday. You want to see how the stochastic is confirming. You want to see where it goes to on a percentage basis. You want to see if the MACD is moving with you. You want to see preferably the 9-period exponential moving average acting as support. And lo and behold, it goes, the requisite of the Chapman wave is to get you to at least D. It can go higher, but it's going to get you to at least D. And what does it do? It goes A, B, C, and then peak D at 17.23 on the 10th of May, pulls back with a lower high, that's peak D, holds that maroon line, that 9-period exponential moving average, and then it goes to an E. And it goes to E at 19.76, and it turns down. As the stochastic was failing, it did not confirm the rally. There was a divergence between the strength of the torque in the smaller time frame of the slow stochastic, and in the huge time frame of that 9-period moving average differential with 26-period look back instead of 14-period look back. And look what happened. Turns down and it plunges to a trough A, trough B, trough C. They call troughs on the downside, peaks on the upside, and it goes to a trough E. So it went to a trough, it went to a peak E, and then it goes to a trough on the downside. Suddenly the stochastic makes a beautiful W formation. It makes a beautiful turn around the bend, and it keeps going up, and it goes up with the price. The price goes to peak A on the 14th of June at 17.54. Pulls back, beautiful doji candle, moves to a leg B on the 18th, confirms the peak D at 18.34 the next day. Pulls back, and the moment it goes past 18.34, it starts leg C. It goes to leg C to 20.04 on the 27th of June. Pulls back, goes to D, and then this is the interesting thing about the structure of the Chapman wave. It pulls back from D and goes briefly underneath the 9-period moving average. That's where you could have taken your money because that's the objective. But look what happened. It pulls back only one day after that does it close underneath the 9-period moving average, and then it goes right back to above the 9-period moving average. It makes a pattern that I like to term, it's a cup formation. But in the cup formation, if the cup formation takes out the left side high bar decisively, that's what I call the cup, the Chapman wave cup and ladle formation. And look what it does. The fast-moving average, that green line of the MACD, goes above the red line. The slow stochastic goes over 80%, and it goes to peak E, pulls back to doji, holds the 9-period moving average, goes to an F, doji candle, breaks down, goes under the 9-period moving average. The high of 22.42 was hit on the 13th of July, and now it pulls back, and it went up in 6 peaks to peak F. You understand how the words, you can say, oh my God, a peak F, what is it, like alphabet soup? But look how beautiful it fits, it conforms. I have to use the words to explain it, but in real life, look what happened. It just, from the period that it broke out above the moving average on the 14th of June, it went all the way to D before it pulled back. And the MACD briefly, just the fast-moving average, went down below the slow-moving average for a moment, for 2 bars. And then it couldn't resist, so it went right back. That's strength. And then it goes all the way from about the 1950 area right to the high of 22.42 on the 31st of July. And then it goes up in the 6 peaks. Before it went up in 5 and came down in 5 troughs. Here it goes up in 6, and it comes down in 5 troughs again to a trough at 17.69, and then in red, and it goes peak A, B, C, D, and another E with a cup formation, tries to break out, cup and handle formation, can't hold it, goes to E at 23.38, 6 peaks higher. That's what I call a left side, right side price time match. I don't want to go into that right now. Pulls back to ABC. Now, normally a trough C with the technicals confirming back again is a good sign, except that this time it did not go beyond B. It went to 23.06, underneath the 23.38 high. That, in fact, forms the pattern that I call the drop bucket formation, the double top formation. It actually conforms to something that I've been working on for some time, but I'm not going to talk about it officially, at least for probably another 6 weeks to 8 weeks. I have to keep testing it. It is the handle and cup formation. It's the inversion. It's the other way around. There's an implication there that it manifests itself in the price movement that follows. And so far, it seems that the price will be going down. So what happens is it pulled back sharply, and then it held nicely in a trough E. I thought it could move a little higher, so we went long the UNG on Thursday at 21. It opened at 20.94, and I believe that we went long at 20.94, and we had a 44 cents loss. Now, most of the time, I like to keep the losses, maybe 2-3% max, because we're holding long positions that are working really well. I don't want to mess around with those. I don't want to take the profits from there just to give away. I would never. I don't like the UNG. The only reason why I liked it is that having gone below the trough at 20.50 on the 9th, my thinking was that it could, in fact, this is one of the results. It might still happen, but it's a little lower now than I wanted to see. That it creates another cup, a double cup formation. That can happen as well. But in fact, what happened is once we were out, I said on Friday, I said very small long at 20.94, gave a minus 0.44 loss, then made a Chapman wave dreaded H. That pattern there is the one that you got to be, it's a notorious pattern within my techniques, because it says if you close below, it means one thing, that would be the low of 20.17. But if you manage to go underneath and immediately spike to the upside, that would at least say, okay, great, you can retest the high. That would be 21.38. And if you go above that, that's important. But I was looking at the stochastic possibly turning, but the MACD was not ready. It needed price movement, and it needed the price movement to go towards the 21.55 area. I do not like this pattern at all now, and I decided that I will not be touching the UNG for a long time. It's a tough cookie. And my looking at it now says that there's a good chance it's going to test 18.91, the low of the 20th of September, and that would take it to some kind of basing attempt. But I'm not happy with this action at all in the UNG. I'll be right back. Basil Chapman and 877-927-6648, sitting for Larry Pesavento.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman sitting in for Larry Pesavento. My service is the opening call. It's a daily, a very comprehensive look at the markets every single day. 6, 7, 8 charts to send a day, but you don't need all those charts. You just need the Dow chart, which is giving you the information on where we are, because the Chapman wave is the waveform that never sleeps. Every single peak gets notated, every single trough. That's audio, that's your obligation, and the rest are just chart patterns. Most importantly, what I'm looking at is my Traders Corner. That's where I have I have about 14, 16, 17 bullet points. I always go through the Dow, whether or not we have it or not. I look at the Qs, I give the parameters of all of them, SPYs, the TLT, the GLD, give all the parameters. We might be in one of those ETFs, might not, but we also have the stocks. And there are stocks that sometimes I like to educate. So within the framework of the techniques that I'm discussing right now, the arch pattern that become a smaller M pattern, lowercase h, lowercase m, or lowercase, just the inverted cup, or the cup formation. These are all things that I talk about on the charts that I show, and why we're in the charts, what we're looking at, why. I'm a little cautious here because the Dow is making a leg E. That's where you got to be somewhat cautious in a rising wedge formation that might break out to the upside, but we've got to be careful that it doesn't pull back. A bunch of things like that. Most importantly, what I'm looking at this particular point is in UNG that it's breaking down. There is some support in the trend line right at about 1938 to 19.36, but most likely, based on my daily chart work, the big test will come. It goes to the doji candle of the 20th of September at 18.91. UNG trading at 19.58, down 70 cents. So that was a question a number of people have asked, both the caller who did have option calls. So the question is on the option call. I'm not sure if it was December. You're running out of time. And I would just say to you, take at least, if you can get some of your profits back right now, No, if you can get some of your money back, you'll be able to have capital to play the game. But if you're just sitting there, there's a good chance that if there's no rally by Tuesday afternoon, Wednesday morning, this thing could just keep going down. If you have the 20 calls, they're going to shrink to nothing. So please be careful. If you're looking out to January, I would have another scenario which you don't have to rush into now. You can call me tomorrow and we'll look into that. But I do expect that the 1920s is going to be tested. And we're going to go to our first caller. We've got Robert in Chicago. Hey, Robert, how are you?
Basil, thanks for taking my call.
It's my pleasure.
Basil, what is your long-term view of Procter & Gamble? I'm long Procter & Gamble, and I've noticed it is running toward above 70. And I was wondering, what is your long-term view of Procter & Gamble? I'm not looking to trade it. I'm looking to stay long it.
So is this something that you bought a while ago and you've just been sitting with it in the ups and downs, and now you're in the money and you're saying to yourself, okay, if I can if there's going to be a defensive play, that is not defense like Raytheon, but a defensive like the Procter & Gambles, like the Kellogg's, etc., then Procter & Gamble should, in fact, have the benefit of the doubt and continue to worm its way. I say worm its way because if you're looking at the monthly chart, that white line that I'm showing if you're looking at Tiger TV on Channel 1, my shows are archived on Channel 11. I believe that Larry's are archived on Channel 12 since it's on at noon. So what I'm showing here is that Procter made a high. PG's a symbol. It's trading at 70.27. Made a high back in December of 2007. Opens at round number 74. It was very important. It went to 75.18, and that was it. That's all she wrote, as they say, as it came back about 40% to 44.63. March of 2009 at the exact low of the market, where on the 200-period exponential moving average with a beautiful candle, then it went to peak ABCD. That's the fourth highest peak, April of 2010, a year later, and then it pulls back, makes the pattern that I call the Chapman wave stalk leg formation. There's an oval pattern, and then it goes towards it makes what I call the neck and the head, and it goes towards a peak C at 67.72 in May of 2011. Interesting how the one-year cycles are working here. And then this pattern says, okay, once you make that head, there should be a beak formation, because this is like a stalk that stands on one leg, has that very large body, and then it goes the neck and the beak took it down to 57.56. Now I have a question of whether this is a brand new peak A to B to C, and the monthly chart needs to go to 70.84 for D, or whether this is actually a peak E and it's about to fail. Well, the MACD is very strong at 91%. Sorry, the MACD is very strong. The stochastics at 91%. I'm taking my time over this because you need to be in no rush to get out of it. This is a very good-looking chart. I'll be back straight after this break, and we'll keep talking about Procter & Gamble with Robert in Chicago. Chicago. We'll be right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations, including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Hi, everyone. I am back. Basil Chapman sitting in for Larry Pesavento, and my pleasure to be here at this particular time. And the Dow is only up 31 points at 13,186, and the S&P is up 2.56 at 1420. I say only, but actually I should say, wow, the Dow is actually up because it's had some really good action lately, and this leg E to the upside is pushing it up against the trend line that should be the rising wedge formation that creates a sudden swoop to the downside, but it doesn't have to be that deep, but it's just real sudden, and it's sharp because everything was going up. It looked like it would keep going up. So the change would be if the Dow takes out the high of today, 13,001. I've said the 13,190s will be very strong resistance. If it takes it out and gets into 13,220s, that's going to be really good action because then it's failed. Then there's no rising wedge pattern. There could be a turn down for another reason, and that would be the mini double top that occurs at 13,290 in that area. That's something else. So I'm going right back because these chart patterns, the reason why I wanted to just quickly compare it to the Dow is that Procter & Gamble, which has been a stellar stock, is making the V-shaped pattern that I often talk about, where it's going back to the left side. There is, at this particular point, a left side, right side price time match that is exceeded in time, but not and failed in price to break above 70.83, the high that was back on October the 25th. That says there could be a nominal new high just above 70.66, around about 70.83 that either takes out that high or doesn't, but it's leg D up if it occurs in the next couple of days. That says the MACD is still strong, the moving average convergence divergence, but if we look at the on-balance volume, it is getting to a level that says to be a little careful. You could still go higher, but it's going to be very limited on the shorter term. But the MACD at 89% is still very strong. So the overall picture is one of strength, and that there could be a minor pullback. Now, here's the rub. Just looking at the weekly chart, the candle that was made on the week of the 26th of October, 70.83 was the high. It opens at 68.35, goes all the way to 70.83, a new recovery high, pulls back to 67.26 and then closes at 69.44. That is, I was talking earlier in my show, that's the Tiger Technicians Hour, about a pattern that forms that creates a rectangle formation. It's very difficult to break out of that rectangle formation top, but it also says, you're in a containment area. Containment meaning that's good. Then there's another pattern that I look at, and this is the double top pattern, but it's the pattern I call, some of them I have little comic terms for, because it's a good way for my subscribers and people who attend my seminars and webinars to remember them. It's the Groucho Marx eyebrows top. So that says, the way I'm looking at Procter at this particular point, there is a lot of resistance that needs to be overcome in the 70.60 to 71.20 area. If Procter & Gamble has any kind of sustained strength that takes it into the 72.50 area over the next week, I'd even say by Friday a week, I give it as much time as it needs because it's a weekly chart. That would be very positive. So as I'm looking at it right now, if there's a little bit of some kind of a double top in both the daily and the weekly, it says watch out, you pull back under 69. It's probably going to test the 68 to 67 area. There's tremendous support all the way down to 65.83. When you're talking long term, 7 or 8% decline should not be a problem, correct? If you're looking long term.
Right.
Because there's also a dividend that comes with it, so that makes it a much smaller percentage decline if you're looking at the total package. My only concern here is that if you're looking at it as a dividend stock, a dividend stock that has the potential for capital gain, if there's a change in the market sentiment and all of a sudden defensive stocks become unpopular, then you're going to see the rectangle formation kick in and it'll start to pull back to the high to the mid-60s. The best thing is if in the next few days, and a lot's going to depend on this candle that's forming right here, which is so far very positive, if by tomorrow afternoon or Wednesday it's taken out 70.66 and gone towards the 70.80s, I would say that's really nice action, and that's raising your base of support. So in sum, I think you've got a fabulous position. I think it's a good safety position as well as a potential capital gain, slow potential capital gain stock. My only concern would be if it suddenly closes under $69, maybe $68.70 by Friday afternoon. If it does that, I have to consider that there's the chance for that double top, that V-shaped formation, the one I call the Groucho Marx eyebrows. That's the pattern that I'm looking at. But so far, I'm putting that out because you asked me for my analysis, and my analysis has to take in both the cons and the pros. And the negative part of it is that if it does stall, it could go back into this trading range. Actually, it's been in this trading range for about since the fall. It's been in this range. So if you weren't bothered before, I'm going to say to you, stay in this position. I'm going to ask you to do something. If you have the time, call me later in the week and let's see how Procter & Gamble is trading, because it's going to be a tell on a lot of market action because it's in the defensive stock area. That is, it is looked at as a stock that many fund managers go to when they're not sure what the heck to do. They say, let's stick with the defensive stocks, gives you a dividend, and consumers always need Procter & Gamble products. So I hope that helps you.
Yeah, Basil, just looking out a little further if you can. I don't know if you can, but if it get up towards 72.50 and above 72.50, do you see this going towards 75 and towards the 80s, or
I tell you exactly what.
Do that?
That's a great question, because the previous high, maybe I should go to my black and white charts because I've got those notated fully. You see the previous high, a candle that I called it the Chapman wave, rogue wave, right shoulder failure pattern. There's a pattern that it was formed that's almost like the Dow back in 1987, except that the result was the same. What happened was that rally that in September of 2008 at 73.57, that's really my target on Procter for a sense of whether Procter is going to go to all-time highs. Because if it takes that out, then 75.18 will be the next level. And if we're not in touch at all, but in fact your Procter & Gamble, because your Procter & Gamble is doing so nicely, you're quite satisfied. If it takes out 77, which is just 10% high, it should not be a big problem because this moves up in stages. If it does take out 77, that would tell us that the defensive area and not the high-tech area is probably going to be in play in late January, early February, if that's when it does it. So that would be my longer-term projection, that the 73 to 75 is going to be really high pressure to see, is it going to be repelled from that level, or does it just slice right through it? My thinking right now, from the steadfastness and the struggle that it's had just to keep moving on to the upside, and I shouldn't say struggle, just struggle in the context that in other times it had beautiful up channels, and this is really a long rectangle trading range that is just broken out to the upside for the first time, says that 73, 75 is going to be the test. That'll be the real tell on what Procter can do longer term. So far, I think it's looking good. And I've got an alternative wave count there that says this is leg C, and if it takes out 70.83 in the monthly, that's going to be leg D. Leg D should not fail just a point or so above the previous high of 70.83. It should actually go quite a bit higher. So I like your chart. I like your thinking, and I like the fact that you said to me you'd like to buy it and hold it. And I can just tell you this, the only way I would get rid of at least part of my Procter is if I saw that it was not holding the 67 to 66, 65 area, starting to break down. I'd say, okay, you must take something off now, because it could start going back to the lower part of the big rectangle formation. So I hope that helps you.
Thank you, Basil.
Thank you very much for calling. That was a good question. I'm pleased that you're in it. Congratulations on it's not a trade, it's in a position play, and as part of portfolio, that's very good. As I say, the candle that I'm looking at now that tells me that the 70.83 to 71.20 area might become quite a bit of a resistance. The candle is the candle in Procter & Gamble of the 26th of October. It's the wide doji. Not quite a doji. If it was a full doji, I have total confidence in saying it's not going much higher. Probably going to get a Groucho Marx eyebrows, double top formation, V-shaped formation. It's going to come right back and then go under 69 and towards the 68 to 21, 50 period moving average support. But the body was much bigger than usual, so I'm going to give it the benefit of the doubt. Oh, there's another technique that I'll use on Chapman Wave technique on PG, Procter & Gamble. If it's able to close above 70.83 for 2 months, that's not to go above and then come back in, but to close above, that's going to be very positive.
Wow.
So, good. Thank you. Thank you so much for calling. Now, let's do this, folks. I want you to look at some things that I know Larry always looks at. I'm going to jump around a little bit. Let me go to my white background charts because I know that I've done quite a bit of work on those. I want to just go to bonds for a moment. So we'll look at the bond. Here we go. USH 13. Yep, I've done quite a bit of work on that. So we're looking at bonds. James Bond. Couldn't resist that. Now, here's another rectangle formation. You see what I'm doing? I'm just grabbing it. It went to a peak G. Unusual to go to a peak G, but it had a doji low that went to a peak C, and now it's not finding the strength. Bonds are not finding the strength to make that leg D. weeks earlier. It hasn't even begun. So this is a daily chart. But if the daily chart takes out, it's at 149 and 1930 seconds on the March contract. If this starts to slide, it's making the dreaded H pattern. Except you've got to, I'm going to emphasize this week after week. The dollar has had some pretty nice rallies, but you didn't see it. Why? Or rally attempts, I should call them. Because I think that the Fed has made a concerted effort over the years, many years, to keep the dollar low. So what has that got to do with what I'm talking about? The Fed has said it wants to keep bonds higher. So even though bonds theoretically, with the market having rallied pretty darn well, 800 points, the Dow, we should be seeing bonds, the TLT especially, should be way lower. Bonds should be retesting the 145 area. They will even be testing the low of 144 and 27, 30 seconds made on the 18th of October. But it's not. Why? Because the Fed said, don't mess with us. Don't short bonds unless you know what you're doing. You can do it on a very short-term basis. Why? Because we're in the market to keep it up. We are the propers upper. We are not going to let bonds fail. And they've said it. And just like they kept the dollar up, even though there were times when the dollar should have soared as gold, every time the gold had those huge hits, the dollar should have been flying, but it wasn't. So this is what I'm looking at. Bonds will change through the TLT if they take out 121.78, the low of the week of the 9th of November, at some point, and it'll make that H to an M pattern that I'm talking about. The only difference is there's going to be tremendous support at 118.05 in the TLT, so it could hang around. Instead of plunging, it could just go sideways. Because why? Because the Fed said to bonds, James Bond, we have your back. And that's all it needed. That's all it needed. I would not fight that. Why? Because, you know, the Fed is the owner of the PP, the printing press. So don't mess with the Fed. Right now, the TLT is up 24 at 124.67. It's making the H formation. It should be lower. It should be testing 122, the 200-period moving average. And it isn't. So keep that in mind. I was asked about the XLF BAC. I'm going to do that. Bank of America, just real quickly. Bank of America leg C up, probably a peak C. I think it's going higher to above 10.68 in the daily. Broke out finally from that long-term rectangle formation. The weekly chart says cup, handle, breakout. One of my least favorite patterns. I'm going to emphasize again, it's only because when it finally confirms what it is, a chunk of the work's been done. Not that the pattern isn't good. It's just that the result of the pattern breakout is not always satisfactory. So it's making that breakout extension. So I like Bank of America. I've been saying that for a while. I think it has tremendous support between 10.22 and 10.07. It's in leg C. I think it'll make leg D up. I'm beginning to think that within 2 days we should get some kind of a pullback in the market. Bank of America also will pull back after it makes leg D. We'll come back with John in Merrimack, New Hampshire, straight after this message. Basil Chapman sitting in for Larry Pesavento.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everyone. Basil Chapman. We are back, and we're going to go straight to John in Merrimack, New Hampshire. Hi, John. How are you?
Fine, thank you, Basil.
Good.
Look,
Yes.
I started a small position in Boston Scientific last week, and I'm just trying to see what you think of it.
This has been the most terrible stock. I had a sell signal at a peak D back at 46.10. I was on air. I discussed it because I was actually I'd come across someone who worked there, and we were kind of friendly. I didn't say anything to him. I just said, you got to be a little careful with your stock. I don't know if whatever he did with it, I have no idea. But it made a beautiful left side, right side price time match from the 46.10 high back in 2004 all the way down to $5.41. Trying to bounce, it went down to 501, 504, then 501, and then to 497, the most recent decline. Now, they did if there was a textbook between them and Staples on how to do things wrong, they did it. But I think that they're turning the corner on a fundamental basis. Everything that I get a sense of that I read, I think they're clearing out the books, and now they've got a new CEO. I think that they have turned the corner. That's on a fundamental. But the reason why I only bring it up is that on a purely technical level, I'm seeing an improvement in the technicals. So I'm going to recommend that you stay in that position. My 120-minute chart says that it's in the rectangle formation. It tested the 200 period moving average at 546, and now it's running quite nicely. If Boston Scientific, BSX is the symbol, trading at $5.66, is able to take out 570 and hold, then the next level will be 577, and then that 586 will complete that rectangle. Then I think it has a little bit of a pullback. If Boston Scientific at the end of especially if it's at the end of 2012, the last day of December, is trading anywhere near let me just tell you right now, $6.13 or higher, I would say that's the first time my monthly chart is starting to say, woohoo! Maybe now you can get a good percentage gain. It doesn't make it a big buy and hold stock, but it says turned around. Very nice move. If everything comes together, it could test $7.26 to $7.76 by late January, early February, maybe March. But that's a great percentage gain. The risk, I would say to you, is more time. I can't be 100% sure, but I'm pretty sure that if it had to even drop below the low of Friday of 546, that 530 to 510 area will be tremendous support. I think you've got a nice small position. I would hold off adding. The best thing is that I could say to you, add a little bit right now, and that would be your trading position. I don't have enough evidence for it, but if you are prepared to take just a little bit more risk with a very tight stop, it's at 565, make the stop 552. I've got a feeling you're going to get yourself a trading position that it gives you more freedom to think, so that as it's moving up, your core position stays with a stop right there at your entry point, and the new position you can have a trading stop in new position if it takes out each level of 577 and then 586. That's the way I'm looking at it. So I think you incorrect me, and I believe that it has the first time that I can say it has a chance to get some real power behind it. So congratulations.
Okay, thanks a lot, Basil.
Thank you for calling. I appreciate that. Folks, as we go out, I was asked about the volatility index. Now, Larry often brings up the volatility index. It's only it's up a little, up 28 cents. It's holding the 9-period moving average, but it seems really stuck in this range. I'll make it simple. If in the next 2 days the volatility index goes above $17.80 to $18.10, this market's coming down. Dow's coming down 250 points or more. S&P's coming down about 23 points. But if it holds here and then it suddenly slides underneath 15.90, you could see that sudden pop to the upside. Just be a little careful. I'm still in all long positions. We'll see what happens. Basil Chapman sitting in for Larry Pesavento. I'll be back with my show tomorrow at 11 o'clock, the Traders, my Tiger Technicians Hour. Thanks for being here. Stay tuned for all the great shows this afternoon.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.